Hi everyone, today let's talk about AI and its effects on the global economy. Then we'll talk about OpenAI firing their CEO. Then we'll get into the data. Then we'll get into the charts and finish up with my accounts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So according to this article, they're saying about 25% of advanced economies are exposed to AI, advanced being US and Japan. On a global basis, it's closer to that 17%. And that means that these companies can replace approximately 25% of their workforce, which would obviously lead to much higher profitability with lower labor costs. And the question is, where does that leave us as an economy? That remains to be seen, but when it comes down to an investor perspective, companies that can reduce their costs substantially utilizing AI should be a good investing opportunity. And they mention here it should crank up US productivity by 1.5% for each year for at least 10 years. Meaning that GDP numbers are going to be strong, they're going to continue to grow on the basis of AI, and that should lead us to a pretty strong growing economy for the next decade, which again gives us a good outlook from the investor perspective. And speaking of AI, OpenAI fired their CEO, which is very interesting considering that OpenAI is the sector leader. They were kind of first to market. They're the company sponsored by Microsoft. When I say sponsored, I mean Microsoft bought about $10 billion of this company, and he really has been the poster child here. And it was also a pretty unusual separation. The board came out and said there was not clear communication between the CEO and the board, and that leaves people wondering if there was something outside of his performance, and that remains to be seen. We don't have any clear picture on what that looks like. So far, OpenAI has done very well. Again, being the sector leader, having a large percentage of the market available to AI. And for a larger perspective here, and now the question for me is how much is this going to affect Microsoft, which could affect the global markets? When the AI story broke, Microsoft was around $240, and now they're sitting up around $360, a massive move for Microsoft. And you could argue that some of that is on the back of AI. And will Altman open up a new AI company? And how long will OpenAI be able to maintain that pole position without his leadership? Moving over to AAII Sentiment, you can see we are at 43.8% on the bull side, well above historical averages. Bears sitting down at 28, well below historical averages. Everybody thinks markets are going to go higher. It's really just a small step up from the previous week, which is interesting on the bull side. And even on the bear side, we had a slight step up as well. In the middle is starting to get squeezed on both ends. Again, from a contrarian perspective, we have rallied up super aggressively. And when we are above historical averages, typically there's going to be some kind of pullback. The question is when. And moving over to fear and greed, we are in greed officially. Previous close was neutral. Last week we were in fear. Now we're all the way into greed. We're seeing that on momentum. Stock price strength still in fear, which is interesting. We'll take a look at the breadth when we get there on the charts. Breadth also in fear. Put call ratio says it's in extreme greed all the way down to 0.8. Definitely interesting to see. Maybe we'll pull up the put call ratio chart this week just to see what that's looking like. It's been a while since I've looked at it closely. Market volatility all the way back in this consolidation range. We talked about that in the Friday video. And throughout the week, we had been falling. Safe haven demand continues to be in extreme greed, which is interesting. People are just not demanding those premiums when it comes to the length of their bonds quite yet. And junk bond demand actually in neutral for the first time in a while. This has been in greed or extreme greed for a long time. And now we're back into neutral when it comes to junk bond demand, which is interesting. Finally neutralized on that chart. Looking at the economic calendar for the week, Monday, just the 20-year auction, fairly interesting. Existing home sales here on Tuesday at 10 o'clock. Also have FOMC minutes coming out in the afternoon at 1400. Looking at Wednesday, Michigan numbers, fairly interesting. Core durable goods orders at 8:30. That should affect markets a little bit. Crude oil inventories have been interesting here recently with oil selling off pretty dramatically. And then the rest of the week we have Thanksgiving, so markets will be closed on Thursday. And then we have an early close here on Friday, 1300 close. But we still have global services PMI, global composite PMI data coming out at 9:45. Moving over to earnings just for a moment. We're basically done with earnings, but there is a little bit left. We do have Zoom on Monday, fairly interesting. The big hitter for the week, and pretty much the only one left at this point, is NVIDIA, coming out after hours on Tuesday. That's going to have a huge impact on markets. Lowe's, fairly interesting. Medtronic, fairly interesting. Autodesk, fun to trade occasionally. And then Deere on Wednesday. Sometimes that's fun to watch. Fairly big company and kind of gives you a good perspective on where the economy might be headed when it comes to large purchases like these ones. Looking at Max Payne for the week, typically on holiday weeks there's not a ton of volume, but this seems to be fairly average. For an off week, 850,000, put call ratio very high at 3.2. Max Payne 441, current stock price 450. Top of the puts right around that 455 level, right at this peak here for calls at 455. That would give you about a 1% opportunity for upside based on current options pricing. 450, and right now a small dip to 445 up to 450 would make sense for the end of the week if we were to slide downwards a little bit. Otherwise, 450 to 455 makes sense to the upside. About a 1% opportunity in either direction. Moving over to the charts, starting off with the S&Ps here on the weekly chart. Another strong candle, up 2.24%. Momentum continues to tick towards bullish on the weekly chart. But really what I'm looking for is a similar move to this rally from the October low here. Two really strong candles, 1 week of pullback, tested that 9 EMA, held that level on the weekly basis, and then had a continuation rally for about another 3 weeks or so. And I do think that makes sense from this dip low as well. So if we pull back, test the 9 EMA, test VWAP down around 43.40, that would make sense. Retest these trend lines, hold that level, and then you could still maintain momentum. You can see even on this down week, going back to 31 October, momentum was basically flat for that candle. And then we got the continuation, and I think that's what we could see here. We did technically a close above my trend line. Next trend line resistance for me would be right in that 45.50 area, which does make sense when it comes to Max Payne. And that would also be technically above this high here from August. And then your next resistance high would be up around that 4600 area, which is your peak from July. Moving over to the daily chart, you can see 4 days in a row we've closed basically in that same range. We are about 0.2 or 0.3% higher from that level that we closed at on the Tuesday session. And you can see momentum has stepped down 2 days in a row here. Interesting. Doesn't mean we can't get the continuation, but we are overbought on the daily chart. Again, you can see when we did hit overbought conditions here in June, we still got a continuation higher into very overbought conditions. But even from that peak level, we ended up pulling back on RSI, and then price action was basically flat at overbought conditions before we got a continuation higher, rallying from that level into overbought conditions once again. So typically when you hit overbought conditions, the rally is either done or very close to done, so you do have to pay attention to that. Doesn't mean we can't throw a wick up to this trend line and then pull back down to that 4,300 area like we talked about. Definitely could happen, but these 3 candles in a row is something to pay attention to. And real quick here for SPY levels, to the downside you have 448.74 to the downside, tested that level on Thursday, held. And then to the upside, you have 453.07, which is right at the peak here from 1 September. And then above that, 457.57, going back to the high from July. Moving over to the NASDAQ on the weekly chart, you can see we finished at 386. Right between my levels here, 384.16 up to 387.05. That 387.05 is right at the wick high from 17 July. And you can see we did test that level, pulled back from it slightly. Even if this is a flag setup and a breakout now, we are at that first kind of critical point, testing the high from the initial flag setup. And zooming out here to give you some perspective, we are right at the bottom of this consolidation before we had that big significant move down on the NASDAQ. These are your all-time highs going back to December of 21, where we peaked out and then sold off. If we break out from this level, the next high is going to be that most recent high up around 403.73. Absolutely possible, definitely within striking range of that level. In terms of momentum, very similar to the SPY. 3 candles in a row, bullish, momentum stepping bullish, RSI stepping bullish, not overbought yet. We're above the SMA. Everything looks good here still to the bull side. Again, doesn't mean we can't get one candle to the downside, test some of these levels, hold support, and then rally through. that would be interesting. But we've seen moves like this on the NASDAQ. You can even see moves like that here going back to May all the way to the peak here in August. Basically straight up, just a couple of pullbacks. Eventually we did have a more significant pullback. And then from that dip low, we had 4 really strong candles in a row into that all-time high before we consolidated and broke down. Moving over to the daily chart, very similar to the SPY here. We've had 4 days in a row after this big gap up in this same trading range, right at these previous peaks. Can't seem to get above that 387.05 level. To the upside, I have 389.54, certainly could get there. But if we did test that level, that would mean we are above this peak from July, and that would typically mean that we're going to break out to those highs that we talked about on the weekly chart. In terms of momentum and RSI, you can see momentum stepping down 2 days in a row. RSI, overbought conditions. Again, similarly, just because we hit overbought once doesn't mean that we can't stay overbought for a while. But even if we are going to hit overbought conditions and continue to rally, usually there's a dip back down to the SMA. SMA holds and then we rally up again, similar to what we saw on this pretty extended rally here throughout May up to August, just like we talked about on the weekly chart. In terms of trading, I would like to see a pullback, test some of these levels, 9 EMA, maybe even the 21 and the 55 sitting all the way down at 366, understanding that there's a fairly decent amount of risk to the downside. Moving over to the Russell here on the weekly chart, you can see we had another big bullish candle coming off of the bearish pullback that we had the week before. So we had a big bull candle, pullback, rally, and this really gave you a better opportunity to trade it. And then we had a really strong rejection off to that 55-week moving average, which was a little bit stronger than I expected. I kind of thought the 179.17 level would hold. We ended up pulling back significantly all the way down to that 176 level. Wasn't great, and then I didn't participate in that rally through. But overall on the weekly chart, still looks okay with some clear resistance at that 181 level. You do have to pay attention to that. Could just be a first test, and then we're going to follow through. If you break 179.66, you could look for that trade up to 183. Again, acknowledging that 55 EMA as resistance. In terms of momentum, continues to look strong, big step up. Big volume on that candle as well, and it still looks okay. Moving over to the daily chart, you can see that wick to that 200 SMA like we talked about, touched that level, pulled all the way back down to below 176 like we talked about. Then it gapped up and rallied, held right in the same zone where we finished on Tuesday, where we opened on Wednesday, and then where we opened on Thursday, right in that same level. Definitely interesting. You can see that was the peak here from this consolidation going back to the end of September. And again, if we can get above 179.17 and hold, which we did not do this week, then we could look for a rally through that 181 level up to 183. Does seem possible. Momentum still bullish, RSI not overbought yet, which to me means the Russell has a little bit more opportunity, but understand that there is a lot more volatility on the Russell versus the NASDAQ, which seems to go straight up. Moving over to the Dow on the weekly chart, you can see bullish week, 1.87%. We're currently between 347.67 and 350.92, right at this peak high from the beginning of September. If this 351 area breaks, then we can look for a push up to 356. That would be interesting. And then above that, you really have these highs going back to November of 21 and January of 22, which is your all-time high here for the Dow. And that level is currently sitting at 365.11 with a wick high all the way up to almost 370. That would be a really strong rally from here. Again, momentum says we are ticking towards bullish, but it does look fairly similar to this move that we had here in March. Couple of really strong candles, ended up pulling back, testing support, and then we had that follow through, which seems like a likely possibility in my opinion. Moving over to the daily chart, you can see we are stuck between this trend line and resistance at that 351 level. Momentum, same as everything else. RSI, same as everything else. Stepping down, RSI overbought, breaking down a little bit. SMA sitting down at 59.93. If we pull back to that level, find some support in that area, that should give stocks a little bit of time to cool off, find some support, and then look for another rally through back into overbought conditions, and then we can reassess what makes sense for stocks going forward. Moving over to the equal weighted S&Ps, again, bullish candle. Did see a slight pullback, but not nearly as deep as the Russell. And you can see we're right at this trend line, right at the 55 EMA and the 21 EMA on the weekly chart. Volume very strong on that candle. And similarly to the Russell, if we can break this area, I have 149.82 to the upside, right at these peak highs from July. And then if that level breaks, then we have these highs going back to the peak in January as well as July here at 155.79. And right now the equal weights still look pretty strong, confirming the rally on everything else. Moving over to the daily chart just for a moment, you can see we are right on top of that 200 SMA, just above my level here at 145.08. As long as that continues to hold, we can look for that rally. We're above all the EMAs and SMAs, which is obviously bullish, but we did get a slight step down on momentum. RSI getting close to overbought conditions on the daily chart, but not quite there, and a push up to 149 does make sense in my opinion. Moving over to SPY Russell and NASDAQ SPY, you can see we had a massive outperformance of the SPY and the NASDAQ versus the Russell going to 2 weeks ago, but this week we had the Russell outperforming pretty strongly. Seems like we've kind of topped out around that 259 area. Definitely interesting. And it'll be interesting to see if this continues to pull back some more. Momentum and RSI say that it could fall further, giving the Russell potential for some outperformance in the coming weeks. Looking at the NASDAQ SPY, basically flat. You could argue it's in an area of resistance in this 355 level. That is the peak going back to November of 21. And we're right at the peaks actually here from February of 21. So definitely an area where we could find some resistance. Maybe we'll see the SPY outperform the NASDAQ a little bit, and definitely it seems like the Russell is finding some strength in this area. Moving over to SPY divided by the M2 money supply, you can see we are almost back to that critical level at 22.05. That is the level that has marked the 3 most recent tops, going back to pre-COVID, all-time high, and then most recent high, all in that same zone. You could argue the level might be up around 22.25. That makes sense to me. But I did want to include this COVID high right at that 22.05 level. And anytime we get above that level, it does not seem to last very long, at least here recently. We were above it fairly significantly for a long time during the dot-com bubble, but most recently this seems to be the cap, and we are very close to that level. Once again here, basically one more little push, and we would be testing those peaks one more time on the SPY versus the M2. And then the question becomes, is that going to be a topping formation again at this level? And then we would be looking for a more significant pullback from that zone, similar to what we had here from July all the way to the end of October. Moving over to individual stocks, looking at Apple and Tesla. Apple had a good week, 1.7%. Wicked my level at 189.96. Right at these peaks here from the end of August, beginning of September, before we had that bigger breakdown. If it breaks this level, we could be looking to all-time highs, up around 196.79, and if that level breaks, then we will be in price discovery. Talked about it a few times. I think 220 up at this trend line would make sense. Again, that would be pretty extended. And expanding out this trend line here, up around 210 would be a little bit closer price target. Coming off of those all-time highs here on Apple. Momentum stepping towards bullish. RSI still looks good. Moving over to Tesla, we had a really strong week actually. 9.15%, massive on the percentage basis. We were watching this 222 peak, and once we broke that level, it rallied up super aggressively up to the 21-week moving average. Let's go ahead and expand this one out just to get a little bit better perspective. We're still kind of stuck in this expanding wedge in a slight downtrend. This could still be a lower high setup, a break down to a much lower low, all the way down around these most recent lows, around 167, certainly possible if we reject from this current level. But momentum says that we could follow through. If we get above these trend lines, then we could be looking for a break back up to this 300 level, which has marked multiple tops going back to August, and then the most recent one here in the middle of July. And right now I'm trading off of the 232.57 level. As long as that holds, then we should be looking for a move up to 264.68. Moving over to NVIDIA and Microsoft, you can see NVIDIA has had a massive rally into this most recent consolidation. It continues to look quite strong. It's been holding support multiple times. The question is, will we break out to new all-time highs? Certainly possible that that could happen here next week. It's rallied up into its earnings announcement, which doesn't always have the best results. But with a company like NVIDIA, which continues to be very strong, right on the forefront of AI with their chips, I would expect that they are going to do well. They did put out a little bit of a warning with regard to China and the bans on technology going to China. They might see a little bit of weakness, but my guess is that investors are going to hand wave that to some degree because that's geopolitics and not something that NVIDIA can control. So we'll see how that plays out with their earnings this week. Right now, they're stuck between 488 up to 497.50. And if it breaks out from here, trend resistance for me would be up at 537. And then looking at Microsoft, you can see it had a wick rejection on that news about OpenAI. Did not look great. Again, let's go ahead and expand this out. Does kind of look like NVIDIA did with a consolidation and then a break higher, where we got multiple new weekly high closes. Now we are right at this 370-ish level. Momentum on the weekly chart still very good. And actually, I want to go ahead and drop this down to the daily chart so we can see what that looked like, because momentum on the daily chart does not look nearly as good. You can see it is starting to fade here. RSI dropping off with that OpenAI commentary on Friday, and if it breaks below that 9 EMA, the 21 is sitting all the way down around 350, which would be just behind my level here at 352. So Microsoft not looking great, especially with volume stepping up on that Friday session. If this follows through here tomorrow, that could weigh heavily on markets. Moving over to staples and discretionaries, both of these are on the upswing in terms of momentum. You can see here on staples, we got above 368.91 just barely last week, and then this week we rallied off of that level pretty strongly. Got up to the 200 SMA, overthrew it pretty strongly. Couldn't close above it on the weekly chart though. That level is 69.79 right now. If we can get above it and hold, watching for that 70.85 level, and then the 21 EMA sitting at 71.33. which would bring us back to these lows here from March of 23. But for me, everything says staples are going higher. RSI has plenty of room to the upside. Similarly, here on discretionaries, still on that upswing. Big candles to the upside. We're above all the EMAs and SMAs on the weekly chart, which does look strong. Did just barely close above my 166.78 level. Next one for me, 170.68. And then we have these wick highs going back to 11 September at 174.76. Volume stepping up on that strong candle. Part of that is probably because Tesla is rallying. You do have to factor that this is potentially still a lower high. The structure is still lower highs and lower lows. And if this tops out here, then you would expect at least to pull back to a double bottom around that 148.98 level. So you do have to factor that in. Again, trading off of 166.78 for now. Moving over to oil here on the weekly chart, you can see we came down and touched that 73 level. Ended up holding. We're in this short-term downtrend. You can see we touched that downtrend line as well. Those two are right in that same zone. And then just behind that, you have the 200 SMA sitting right in that 70 area. Typically, when these levels are so close together, you would expect at least a test of that 200 SMA, similar to what we saw here. Consolidated, couldn't hold that level, ended up touching the 200, rallying off that level, came down, touched it again, rallied off that level. So 200 always holds a lot of strength, momentum still bearish, RSI still bearish, and you would expect this to continue lower in my opinion, at least until we touch the 200. And it could take multiple tests before we find any real strength here for crude. Moving over to the put-call ratio, we haven't talked about this one in a while, but you can see here we did get a really strong wick to the downside. Didn't quite hit my level at 0.53. That's usually when we're starting to top out at least a little bit. Doesn't mean that we can't get much further below that. Once we start to get into the 0.43 area, that typically means we've kind of topped out, at least in the short term. Here in recent history, you can see we usually hit that level and then eventually rally back into the middle of the range. Similarly to the upside, you have 1.4 as kind of a preliminary level. And then once we get into that 2 range, you can see that marked the bottom here in March of 22, where we got all the way up to a 3 level. That was a massive high there on 16 March of 2020. And then from there, we saw markets rally and the put-call ratio pull all the way back. And then we saw that first test of that 43 level here in August of 20. So it's a useful tool here on occasion. And you can see we got fairly low, but not into an area where I would pay attention to it quite yet. Moving over to breadth, both of these still look very good, very strong on the week. 50-day average, not getting into an area of resistance for me. Maybe I'll add a level here in this mid-range. This is a pretty wide gap. Maybe I'll put one here at the peak high from 12 June at 68.66. So we are above that level. Doesn't really give us any more information on a bullish side. Still looking at 77.46 to the upside for me. And then looking at the 200 SMA, a little bit more information. We are right at that 55 EMA. stuck between these two levels, just below 52 and just above 49.76, above that 200 SMA, but you have the 144 and the 200 sitting at 56.32 and 56.45 right in that area of resistance. If we did touch those, I would expect some resistance similar to what we got here. Rallied up, touched that 200, pulled back pretty significantly all the way down to that 36 level before we had a continuation rally. It is worth noting that this most recent rally did dip lower and did have a much stronger impulse, which is more similar to the move that we had here from the low in September all the way to the peak here in November. But again, even on this rally, we still topped out right around that 200 SMA before we had a couple of weeks of downside following that move. So going off of that thesis, we should see at least a little bit of a rally up to that level, and then we could start to see a little bit of a pullback from that zone, and then a continuation rally similar to what we had here from May into July. Moving over to yields just for a moment, you can see they have been selling off over the last week. 2-year yield still holding above 4.8. It's touched that level several times, got very close to the 144 EMA. Stuck in this range, 4.825. It'll probably stay there for a while. It does make sense in the short term, especially with the information that we have from the Fed. But more importantly, looking at that 10-year yield continuing to sell off after getting to that 5% level. It's now well below 4.5, getting closer to that 4.35 area. If we could get below that, I do think that that would continue to be bullish for markets, with the 144 sitting down at 4.13, which I think would be a healthier target for the 10-year yield and better for equities in my opinion. Moving over to the dollar on the weekly chart, we got a massive bearish candle. We kind of expected that. We had been rolling over for a couple days. We had a big bear week on the week of the 30th. Slight pullback to the 9 EMA, broke down further below the 21, and we are technically below the 55 as well. So now we are looking for that 144 EMA, which is right around these lows here from 10 July. Everything looks weak here on the dollar. You can see RSI broke down close to a retest, broke down further, momentum ticking towards bearish. It does seem like the dollar is going to continue to sell off next week. Moving over to JNK and TLT. JNK having a strong week, almost 1% up to this trend line here, rejected a little bit from that level. You can see that was a pretty well respected level. Wick low, wick low, wick low, until we broke down here on the week of 18 September, which ended up being a very significant breakdown once we broke down on a closing basis. So that was a significant level. Now we are retesting that. We're above 91. Back in the middle of this range. Everything looks okay here on high yield bonds. Looking at TLT, this is kind of a wedge formation, not typically what you would want to see. If it breaks out, test the 21 up at $93. That could be interesting. Again, look at this volume at these lows. Massive, massive volume. People establishing positions for the longer term, in my opinion, which I do think is going to push TLT higher over the longer term. This is still a pretty tough trade. You can see we continue to make lower highs and lower lows, and until we see any difference, you do have to expect that this could be a lower high and another breakdown to this previous low. And then if we get a double bottom consolidation at that 83 level, then we could look for a longer term buy. But you do have to pay attention to this massive volume. Look at these volume numbers. 302 million bonds trading every single week for the past several weeks. This is more than 3 times the normal range between 80 and 100 million on an average week. So people buying tons and tons of bonds, in my opinion, and you can see that it is a buy with these most recent 4 weeks of bullishness. And we didn't really start seeing those higher volumes until the week of 2 October, once we got into that 85-ish range. So definitely interesting to see on TLT. And I still believe that this would be a good longer term investment opportunity, but the structure in the short term is still kind of weak. Moving over to the VIX on the weekly chart, you can see we ended up topping out at the 200 SMA, wicked that level, and then rejected very strongly from there. I was watching these trend lines, but technically we closed below it this week, and now we're back into the middle of this range. Could test all the way down to 12.75. And then I have a level here at 11.77, going back to the lows all the way from 2018 and 19 in this previous consolidation. But if we zoom in here just a little bit to the daily chart, you can see that momentum is still moving towards that bullish direction. That Friday session did kind of break that thesis a little bit. Like I said, I was watching for that trend line to hold. We did have a nice little bounce on Thursday, but right now we continue to break down, and you have to look for at least these consolidation lows like I talked about at 12.75. Looking at my accounts, I did okay. I was only up about 1%, so about half of what the overall markets were up. I was pretty concerned that we were going to be topping out and breaking down, and I still think that that is a possibility with the sideways price action that we saw on the major indices. And you can see right now I still have these 2 covered calls on these 400 shares with lots and lots of protection. Current stock price right around 386, down a little bit from that after hours. But you can see my strikes here at 379 and 377 with massive credits here, so really well protected to the downside with just a little bit of opportunity to the upside. I do think we will see at least somewhat of a pullback, even if it's shallow, and then a medium-term continuation to the upside. Let me know down in the comment section what you think of the future of AI when it comes to the economy, and what's going to happen with the CEO of OpenAI. After filming that section of this video, I was reading that Microsoft is petitioning to put him back in the CEO position, so there is a little bit of drama there. Definitely interesting to see. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.